Hello, everyone. I hope everyone is enjoying their weekend. Don't think the stock market is enjoying its weekend too much. Stocks decided to go ahead and continue to sell off on Friday before the NASDAQ could even touch the 50-day moving average. The Russell 2000 ran into the same problem with it reversing of the 200-day moving average. Now, I'm not sure if the market's going to crack wide open here, only because the 50 and 200-day moving average aren't close enough for me to see a breakdown here and then definitely see, the market crack wide open. I want to go to the best sell signal that we got since 2008. And as you'll see here, it was back on 7/27, 2011. You can see where the 50 and 200-day moving averages in relation to each other. And oddly enough, not oddly enough, but as you can see, the best downtrend was given from that signal. So right now, I still think that the 50 and 200-day moving average might be too far away for a big sell-off. However, this market is pretty screwed, and I mean, I'm watching a lot of Facebook groups, chat rooms, and message boards, and there are a lot of new traders in this market that I don't remember seeing at the beginning of 2013, and there are a lot of them that are trapped long in these most speculative stocks, and there's many buying the dip and adding to their positions. There are some that are selling out here, but whenever you look at this chart of the NASDAQ, notice that on each dip here in the market, I'm going to then put the VIX chart up, and you will see a direct correlation to each dip in the stock market having a spike in the VIX. This time around, no spike. We are still below the 50 and 200-day moving average on this index, which is comical to me, despite the NASDAQ and Russell 2000 looking like it wants to crack right below their moving averages. And this is all a byproduct of the safety that remains in the S&P 500 and Dow Jones Industrial Average. However, I've been thinking that if these things crack to new highs, that they're just going to reverse and roll over anyway. So far, that is playing out, as we had the attempt in late March, early April fail, and now here we go trying to have another attempt fail. And on top of that, while XLE doesn't look bad, I got 50% sell signal in EOG today, and EXL another 50% sell signal, and CLR gave me a 25% signal. CLR and EOG selling off like that on heavy volume now indicates that oil stocks might not be moving up higher anyway, and that might lose its safety, and that leaves only the utility stocks out there as a safety net. And I don't know how many times I have to make this clear. Utility stocks leading is not good. If we see this index then roll over and crack on heavy volume like it tried to do on 417 and it tried to do on 410, and it can actually get below this uptrend line here, I guess we can say, if we connect it. Man, stupid laptop just doesn't like to work all the time. I think that we could be in for a very, very rough slide down. So keep an eye on all that action in the utilities as we go ahead. Continue to watch the energy sector and the REITs, because also I got a full sell today in one of my REITs, OFC. My only other REIT that I have right now, off the top of my head, why can't I think of it? TPL. TPL remains above the 50-day moving average. However, it's failing a pocket pivot point signal, and that's never good to see. So we'll see if TPL can hold. But the fact that OFC is a full sell, another safety stock, CRVL, gave a full sell, EOG, EXL gave 50% sell, CLR gave 25% sell, and FDX gave a 50% sell. It should not have come back below the 50-day moving average following our long signal on 416, the fall through 417. In my opinion, it shouldn't have pulled back. And whenever I look at its brother, UPS, the other leader, it looks like that it also wants to roll over. TSV and MACD, they're not doing anything. There's no like extreme positive divergence. So FDX is also 50% sell. And whenever safety stocks are now giving me sell signals, along with all these big cap stocks that are cracked wide open, I just don't see how that's good. And let's look at some more leaders. Look at Cree. Cree's about ready to shit the bed, it looks like. Under Armour, same thing. Visa and MasterCard, that's bad. Those are major cracks. Buy puts on these if you want to. SSTK, not good. Away, Pandora. Look at these cracks. Priceline, Amazon. It's going to take one hell of a session on Monday, Tuesday, Wednesday, Thursday, or Friday on huge volume to make me think that we're going to be able to reverse this anytime soon. This is nonstop selling from the March highs. There's been barely been any rally attempt, and then just more selling. Twitter wants to roll over from its move off the April lows. UBNT was like the #1 IBD stock there for a while. You can see it now couldn't even get back above the 50-day moving average. LinkedIn, breaking down again. And FEYE continuing, can't go any lower, it can't go any lower. I kept seeing that and hearing that from trapped FEYE bulls. Not sure why everybody's so bullish on a stock that looks like this, but that's no good. And all these stocks, I mean, you look at Netgear, you look at CMG, you look at Netflix, you look at Google. There's one stock that's holding this whole damn market up, it feels like, Apple. What the hell are you going to do if Apple starts selling off? Doesn't that make like about anywhere from 5 to 15% of that S&P 500 and the NASDAQ 100 and NASDAQ? So it's like, what the hell is this market going to do if Apple can't hold on to the gains? Which I find it hard to believe since it's splitting 7 for 1. So all this makes me very, very cautious on the market. I'm not sure if it wants to crack wide open, but just in case it does, I can't wait, man. I got to start adding some shorts again. I cut back on a lot from the most recent signal, but all the earlier short positions I have on, they're still quite nice. While I don't have a big position, I am still about 13 to 14% short, and following Monday I'll be 25% short, but I'm going to add to SOXS. I know we just got rid of some of it in the morning on Friday, but hell, look at this pocket pivot point buy signal. I'm not one of these traders that once I'm that are afraid to get back into something if I believe that it's ready to move. And while I still think SOXS might have time to move sideways if we're really breaking out, I got to get long here just in case if there's all of a sudden World War III starts on Sunday. So SPXU is another one I'm adding to, 2.5% to SPXU, 2.5% oscillate to SOXS, SQ to the third S to the Q third power, whatever you want to call it. I'm going to add 2.5% to that one. FAZ 2.5% goes to that one too. So FAZ 2.5%, SQQQ 2.5%, SPXU 2.5%, and then SRTY, that's the one I was forgetting. Sorry, I don't have my notes in front of me. 2.5% also into that one. Would all of these have been 5% if we would have had more volume on the sell-off today? Yeah, with the cracks that I see out there and all those stocks I just brought up. I didn't bring up Tesla and Solar City, a few more leaders that are showing signs of rolling over that couldn't get back above the 50-day moving average. But when you look at all these stocks, yeah, you can go ahead and push it if you want. Like I said, I believe Apple prevented the market from having a possible rout bloodbath on Friday, which could have opened the door for an ugly Monday. But it's April. You don't get huge sell-offs normally in April. You get shitty months in May, June, July, but the big nasty sell-offs, those come in October. So it'll be interesting to see. I mean, we got the one in 2011 that happened in the summer, so you never know. Anything can happen. Speaking of anything can happen, there was one amazing play that I didn't take because I'm a pansy, and this methodology is new to me. I've been following lately. I mean, it worked here, plug. I gave the short sell signal on plug over here. Gave it on ARTX also the same day based on the action in plug. And because I knew ARTX was possibly, the rumors were heavy and thick, that a bad Seeking Alpha article was going to come. Plug, since the clear short signal that IB had shares to borrow, is now down 23% in 4 days. ARTX is now down 24% in 4 days, and ARTX was an immediate winner as the Seeking Alpha article did come out. On that same note, VDSI, it was, out of all the earnings reports I saw on the 24th, VDSI was the best. That was an excellent, excellent, excellent report. Data security software in a rough market. Look at the MAC and TSV lines and money stream and relative strength lead, and BOP already increasing the day before earnings. You get the buyable gap up. It opens at 880, just above prior resistance on big volume, and it rises throughout the day. By the end of the day, if you were still long, there were rumors before the close that analysts was going to come out and upgrade. That happened, and what happened was amazing. So due to my pansiness, I unfortunately have left right around 30% on the table. So about 30% was left on the table in VDSI. I do personally know people that bought the buyable gap up in the morning, and they did not hold it all the way to Friday's close. But if you were a trend follower and you're using end of day action, you are still long from the buyable gap up. And as you can see, like I said, this is the best earnings report I saw this past week in any stock where I was impressed by the upcoming possible sales and earnings growth from this company along with the current beat. So VDSI, as you can see, there's still momentum out there in small stocks, which is a methodology that I continue to study, that I'm going to definitely implement in side accounts to get some nice big fat returns. I'm not using it in my main accounts only because it's a speculative methodology, and I want to see if I can't turn 5,000 into a couple of $100,000 in a 3-4 year period, possibly $1 million. It would just be interesting to see how I do with these little guys, but so far it's working well. It's working better than my methodology. However, if the market cracks wide open, we'll be doing good. So 2.5% adds to all hedges. CRVL and OFOC are partial sell or full sells. EXL, FDX, EOG 50, CLR 25% sells.